FIRPTA is the Foreign Investment in Real Estate Property Tax Act. There's a few things that are important to know when you're representing a seller to know if FIRPTA is going to apply. The first thing I would say is to know if the buyer of that property is going to occupy as their primary residence. Also, a factor that is important is knowing the sales price. If the sales price is under $300,000 and your seller is foreign, FIRPTA doesn't apply. If the sales price is over $300,000 and the buyer is not going to occupy as their primary residence, FIRPTA will apply. This is important to know while you're listing the property and marketing the property, because if there is a foreign investor where FIRPTA applies, we are going to have to withhold a tax. That's a federal law. We are required to hold 15% of the sales price, not to be confused with 15% of the proceeds. So it's important to know which way your seller is going to have to handle this transaction. There is an option to submit for what's called a withholding certificate, and that's where the seller is going to fill out the information and send it into the IRS, and they're going to get back the information basically of whether or not we have to collect and send the whole 15%, or if there's going to be a lesser percentage that has to be paid for that transaction. 1031 exchange is a unique tool that a seller can use to basically defer taxes on a property where they're receiving a large amount of proceeds. In order to do that, you have to get a 1031 exchange company, which there are many, and they're going to act as what's called the qualified intermediary for the transaction. And how this works is, if I'm an investor and I'm, say, selling a property that I've never lived in, it was not my primary residence, I can get a 1031 company involved. Basically, the proceeds that I'm receiving from that sale are going to be sent directly to that 1031 company, and then that money is able to be used to reinvest in real estate. Now, there's a lot more nuance and rules that go along with that, so if you're interested, you should probably reach out either to us or to a 1031 company to find more details. But basically, there's a short window of time, whether it be 60 days, 90 days, where you can reinvest that money and save a little bit on the tax that might be imposed on the proceeds of the sale.